Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian bulls slipped off the road last week after the many attempts to clear the 60-day simple moving average failed. Along with this, with the negative signals coming through and only one bullish, which was a dragonfly, failed, and the market is now turned around, and for the fourth consecutive day as we move into the start of this week looks towards the level of 67.60. We did get a rejection from there on Friday after posting a low of 59, but nevertheless the market is still negative due to the fact that the MACD has married up to the RSI, and therefore I do expect to see further weakness, with the initial target remaining at 66.80.90. Now do be on your guard towards that level. The fact is that we've got a long-legged doji from the rejection of that challenge, a bullish outside range day from that challenge, and another bullish outside range day from that challenge of 66.80. So no doubt we may see again another round of strong demand from this level. Accordingly though, from the text, I do believe the market will continue its descent from the start of this week, after news at the weekend that Chinese officials were cutting their trip to the US short, which could dampen hope around trade negotiations between the US and China. Nevertheless, the market has seen this possibly as negative, so therefore could see further weakness to the downside. Resistance at this stage comes in at 68 cents. Looking at the euro, the market is still holding to a relatively strong downtrend, since the many attempts at this level of 110.65 to 111.15 has failed. With the resistance now seen at 110.65, I do expect to see further weakness, with the target holding towards the level of 109.35. Like the Australian dollar, do be on your guard. From that level of 109.35, did post a dragonfly and a bullish outside range day that did fail. Nevertheless, there is potential a bullish camp from this level of 109.35. The fresh advances should continue to fail at 110.65 to 111.15. Well, since the risk to the geopolitical concerns is the fact that dollar yen has still maintained its bearishness and now posts a fresh low that comes in around 107.45, with 51 being the low, but the support of 45 is still a key point. I do expect to see, as the bears pressure this level, we could see a further weaker breakdown and look towards a level of 106.70, where I've outlined it here. The technicals are breaking down also, gives me further hope that this view will come through. The ascending triangle is a little bit on the concerning side, as the market did take the challenge higher on Friday but failed, and now posting a low back towards the bottom side of the range around this morning of 124.64. This pattern holds, and the trend, as long as we don't break 124.15. I do expect to see further risk to the upside and look towards 126.55.75, but beneath 124.15 negates the bullish view and reinstates the downside to 122.40. Gold again finds momentum after risks of geopolitical uncertainty return to the market. It was reported on Friday that the US military is locked and loaded after President Trump authorized the deployment of the additional US forces to the Middle East to strengthen air and missile defenses around Saudi Arabia and also the United Arab Emirates. The Pentagon announced late Friday, that is. On the pattern though, it is bullish, and I do expect to see, as I've been looking for quite some time, to a challenge up to 24. This could proceed further up to 30 or maybe back to the highs of 54. So do keep an eye on that. Any pullback should find support around 1,506 to 08. Still uncertainty to this oil pattern. I'm neutral due to the fact is that since the 15% gap opening last Monday and posted a high of 63, I'm not too sure on whether the market may fill the gap first or continue on to the top side, because the technicals are really on the point of giving me little indication of where the market may be going. So I'd rather sit out and be neutral for now. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report and hope you enjoy the great start to this wonderful new week.